McClanahan.
And I am Logan Greenfield, and we are
the McClanahan Group.
And Randall, I was sitting here and thinking, we get this question a lot in regards to putting 20% down. Because a lot of people, they think, when they're growing up, they hear mortgage insurance and think it's kind of like a 4-letter word, so to speak. And so they're like, but I don't want to wait a decade to save up to put 20% down, but I also don't want to pay mortgage insurance because I think it's a really bad thing. What kind of options do they have?
So that's a good question. We get this a lot. I hear it from first-time buyers. I hear it from second-time, third-time buyers. One of the things that happens when you're out buying a house is friends and family are going to offer you advice. It's
Always.
well-intentioned.
Yeah.
It truly is. I taught first-time homebuyer classes for about 10 or 15 years, and it was one of the things that I said in that class that I heard from so many people that they came back and said, Randall, really good advice. When friends and family give you advice, point you in a direction, tell you something, take it well-intentioned, and it may be true, but it may not. A lot of times what happens is mom and dad are telling you, don't do this based on an experience from 20 or 30 years ago. Things change.
Things have changed a lot.
A ton. 20 or 30 years ago, mortgage insurance was a whole lot more expensive. What they did was they put everyone in the same bucket. If you had good credit or bad credit, as long as you qualified for it, you had the same mortgage insurance rate.
And what was that rate? Was it pretty high? Was it pretty low?
With 5% down or 3% down, I'm thinking it was like, it could be up to 1.2%. Well, we recently did a loan for a lady, was buying a house. It was a good house. She wanted to make it a perfect house.
Okay.
She bought it. It was around $375,000, $380,000. The loan amount ended up being about $350,000. The mortgage insurance was $76 a month.
That's it?
That's it. With 5% down, she kept that 15% that she would have put down based on what mom and dad told her about mortgage insurance being bad, use that money for the fix-up rather than going out and doing a home improvement loan that's at a much higher rate. The other problem you're up against is if you're waiting to save that 20% down, like you said,
right.
What if it takes you another 2 years?
Mm-hmm.
Where are rates in 2 years?
That's a good point.
Could be higher, most likely will be. Where are sales prices in 2 years? Based on trends right now, so you set a plan to save for 2 years to get your 20% down. Prices have gone up 20%, you're still short. So the point and the takeaway is don't assume it's bad. Get information to make a good decision, get the numbers, and figure out if it works for you.
Yeah, and we'd be more than willing to walk you through that, answer those questions, and to continue to explain it in more detail. So please feel comfortable reaching out to Randall. Please feel comfortable reaching out to me, Logan. And just as a reminder, we do loans in the entire state of Texas. So no matter where you are, we're here to help. Thanks so much.